Why real estate? And why is it a perfect match as a business owner? Well, one, you want to turn your revenue into riches, okay? And real estate is a dual purpose asset because it not only builds your wealth, but it saves you money in taxes. So you have to learn this stuff. You can leverage properties as a business owner that you already own or already invest in, okay? You can turn your personal residence into your first rental and then buy another personal residence. There are ways to do that. You're not just here to make revenue for vanity purposes. You're going to be using that revenue to then make you rich. Hello. Welcome to another episode of Life-Changing Money. I'm your host, Barbara Shreehans, and it's another solo episode today. We are going to dive into real estate tax strategies for business owners. I know most of you listening already own your own business, so now you need to couple it with real estate investing, and I'm going to give you some amazing tips and tricks. Okay, let's dive into how business owners can maximize your deductions with real estate. You're going to learn strategies that will help you save on your tax bill, like hello, we all need that, and business use property deductions, okay? So, why real estate? And why is it a perfect match as a business owner? Well, one, you want to turn your revenue into riches, okay? You're not just here to make revenue for vanity purposes. You're going to be using that revenue to then make you rich, which means you're not just going to blow it all on designer bags or shopping, travel, shit you don't need, okay? I love that stuff too, but make sure it's like less than 10% of the money that you bring home. The rest you need to be saving, using on your household, using it for investments. And real estate is a dual purpose asset because it not only builds your wealth, but it saves you money in taxes. So you have to learn this stuff. You can leverage properties as a business owner that you already own or already invest in, okay? You can turn your personal residence into your first rental and then buy another personal residence. There are ways to do that. You can access the equity in your personal residence to then buy your first rental property. There are ways to do that. You have to know who, right? It's the who, not how. You have to know who to use for lending. And if you need a suggestion, just DM me on Instagram at your tax coach or on Life-Changing Money podcast or on the Barbara Shreehans Instagram. Speaking of, do you guys know that we have 3 Instagram accounts and like when and where to use them? So the podcast has its own Instagram now, Life-Changing Money podcast, and you can message us anytime on questions you have, like on something you listen to on the podcast, a topic you want to learn about, a guest you have a suggestion about, your tax coach, obviously if you have tax questions, and then Barbara Shreehans for anything finance, fitness, fashion, okay? So leveraging the properties you already own. Yeah, maybe you turn your personal residence into a rental. So you move out of it, stay in an Airbnb for a few weeks or a month or whatever. And if you have a year lease signed with someone in your personal residence, you can then count that as an income producing asset. And now you can re-qualify for your home, like a personal residence somewhere else. Sometimes you have to move out for a while. Sometimes you don't. Depends on how much income you have, what you can qualify for. Like I mentioned, you can access the equity. What does that mean? Well, maybe you bought a house for $300,000 and now it's worth $700,000. Well, that means you have $400K of equity. 700 minus 300, you have 400K of equity. Maybe you paid it down to like 200. So now you have 700 minus 200, you have $500,000 of equity, meaning you could get a HELOC, a home equity line of credit. You could do a cash out refi, but for most people, a cash out refi doesn't make sense because rates are really high right now. But a HELOC could make sense, meaning your bank or a lender will give you a line of credit, like a credit card, and you can use that to buy more rental properties. Like it's pretty sweet. Okay. So while you're saving money on taxes as well, you're also building equity and then using that equity to buy more and then doing it all over again. You're going to save more in taxes. You're going to build up the equity. You're going to pull the equity out again. And you're going to buy more real estate, more rental properties. So when you do that, let's say you have a rental property. Let's go over home office deductions, right? You're going to be working in your house already on finding a tenant, interviewing the tenant, using your computer to post the listings, saying that a listing is available for rent, to go over the contracts, have different meetings with vendors, contractors, handymen, repair people, like all of that. You're using a home office. So make sure you're taking the home office deductions. Now, if you're already taking a home office deduction in your business, you can't can't double dip there, but if you're like a W-2 earner, make sure you're taking your home office deduction on your rental property. To that note, make sure for the rental property, you're also deducting those home deductions, like if you're paying for any utilities, any repairs, things like that. Maybe this property that you own, the investment property, is for business use. Maybe you own an office. So you need to know about the self-rental rules. This is where your business is owned in the same percentage as your rental property. Meaning if you own your business 100%, you have to own the real estate 100%. It can't be 50-50 with your spouse. So let's say that's the case, that it's 100-100. So you're all good there. You can qualify for self-rental. So normally your real estate loss would not offset your business income. It would not lower your business income because you're not a real estate professional. But if you have a really good tax accountant like us, like your tax coach, go to yourtaxcoachscheduling.com if you need to make an appointment with us. But your accountant would make an election called the self-rental aggregate election that aggregates your business use property loss with your active business income. Let me give you an example. Say you buy an office for $700,000. You get a cost segregation study on it, as everyone should with every investment property that they own. You get a cost seg. We can do them for you. It's $39.50 for residential, $59.50 for commercial properties, but you will save a shit ton of money in taxes. Okay. So you buy a $700,000 office, get a cost seg study done on it. And let's say you get $150,000 in deductions that year. That is freaking amazing. That means your real estate on paper lost $150K. And if you're a business owner and we do the self-rental aggregate election, it means that that $150,000 loss can lower your business income by $150K, meaning you're going to pay a shitload less more in taxes, right? That could be like a $50,000 tax savings, a $75,000 tax savings if you're in like California, New York, or something like that. That is huge. So you need to know the self-rental rules. You need to know these aggregation elections. Your accountant needs to be educating you on these things. And if they are not, please fire them. Like, just because it's your cousin's wife that has done taxes for 37 years does not mean they're the best fit for you and your business and your rental properties. Like, again, stop using an accountant that doesn't have rental properties if you're a real estate investor. Okay? Make sure that you are depreciating all the equipment in your rental properties. So this could be your appliances. This could be you leave a lawnmower there because you want to make sure that they're mowing the grass. You want to make sure you walk through the property, you look at every single thing inside the house, and it's being deducted, and that you know it's being deducted. Don't be the person that's like, I don't know. I don't know what my accountant's doing. I don't know what's being depreciated. It's very easy to see. You go to your tax return, you go to the detailed depreciation worksheet, and it will list out every asset in your rental property. If it's a short-term rental, it's going to have furniture. If it's an office, it's going to have furniture. If not, it should show leasehold improvements. It should show 5-year property, 7-year property, 15-year property, 27.5-year property, 39-year property, and land, which is non-depreciable. You guys need to know these things because although you hire professionals and accountants, you need to make savvy and educated decisions. And how are you going to know if you have the right accountant? How do you know if you have the right person or people on your team? If you just let it go. The perfect example for me is like when we first started, we hired a property manager because I don't know, everyone said get a property manager because managing your properties takes a lot of time and it's hard and blah, blah, blah. And we were out of state, like so many things. Well, guess what? We kind of set it and forget it with that property manager, and they ended up stealing a lot of money from us, like a lot of money, because we kind of turned a blind eye and we were like, oh, they got it. You know, oh, the property must be vacant this month. The repairs must have been higher. Like money likes when you take care of it, when you confront it, when you comfort it. So please learn this stuff. Yes, you're going to hire professionals like us, like tax strategists. You're going to have really great bookkeepers, but you still need to know this stuff too. When you own real estate, you can also deduct your business vehicles. So you need to buy a work truck because you are remodeling one of your properties and you need to be driving back and forth to Home Depot or Lowe's and getting supplies. You're going to, be taking trash back and forth, all the things. So you need a business truck. You can write off that business truck in your rental property. I think a lot of times people think it's only for business owners, not real estate investors, but that's just not true. So make sure you're tracking your mileage back and forth to the properties, to different places like Home Depot is probably a big one because you're making repairs, or maybe the post office because you have to ship something that's related to your real estate. Maybe you're driving to your real estate attorney's office, something like that. Track the mileage, okay? And I already mentioned it, but make sure you're getting a cost segregation study because it's going to accelerate your depreciation. And we all want depreciation. So as a business owner, you're going to bring in the revenue. You're going to turn that revenue and profit into riches by investing into real estate. If it's something that you're wanting to do, if it's something you're going to educate yourself on, if it's something you're passionate about because it's a tangible asset that you can drive by and see and you can pass on to your heirs, like real estate investing is the number one way to save money in taxes. And when you couple that with being a business owner and real estate investor, you are setting yourself up to build more wealth faster because not only are you saving money in taxes, you're going to have appreciation on the property, hopefully, meaning it's going to go up in value, all while someone else is paying down your loans on the property. The loan is not income to you, which is fan-freaking-tastic. The interest you pay on the loan is a business deduction, which is fan-freaking-tastic. You're going to hopefully cash flow on the property, meaning you're going to make more money every month than what you have to pay out, okay? And you're going to save money in taxes. It is like a win-win. So get started. Let me know if you have questions. Sign up for the masterclass on April 16th. I am diving so deep into real estate investing. Like, this masterclass is so good, and it's the only one I'm doing this year for real estate. I'm so excited to see you inside of the course. If you choose to be in our course, you get a live mini mind session with me where we can go over exactly how to build your wealth through real estate. And this episode just scratched the surface on deductions that you can have in your real estate portfolio. So definitely keep listening. The course has so many more. And the masterclass will walk you through exactly how to put these strategies into action. The link is in the show notes. Also go to Instagram. The link is in my bio on Instagram, and it will sell out. This masterclass is free, but we can only have 2,000 people sign up. So sign up as fast as you can so that way you secure your spot. And again, I'm just so grateful for all of you listening in. If you love the podcast, you got a little nugget of information, please tag me on Instagram or social media at Life Changing Money Podcast or Your Tax Coach or Barbara Shreehands. Just tag me somewhere. I'd be so grateful. Tell the world what you learned. And please leave a 5-star review on the podcast. It means so much, and it helps our podcast reach more people and help build wealth and make more millionaires. Thank you so much.